Hello traders, this is Rich Terra from Tradesight. This is the market preview for this coming session. Tuesday, March 26, 2013. The current session was one that was colored by distribution and pretty much negative readings across the board, though internally they weren't all that damaging. We did see the SPOOs lower by 5 handles on the day, and the NQs lower by about 10 or so. We did have all three sides, the NASDAQ, the SPOOs, and also the Dow lower on the day. The market internals were, modestly negative, but not decisively so. We closed minus 600 issues on New York, and minus about just 100 on NASDAQ. The trend did close at 1.45, but it didn't really blow out the overall put-call ratio or the 10-day trend, and we'll take a look at those in a little bit. But let's move on to the pertinent charts. Let's first take a look at the ES futures. All right, so here's a look at the ES futures. You can see that we did gap up and we did print a new high on this move. However, while we did so, we ultimately closed the gap and rolled down to even close Friday's gap. If you can look at the tail there on the chart versus Friday's open. So Friday's open left the gap open, which was actually kind of unusual. Friday's gaps tend to like to close, but we actually took care of that today. So what we have today is essentially not quite but almost an outside day down at range high. We opened higher on the day, completely covered the previous day's range, but we did close just barely above the real body of Friday's candle. So while it's definitely a negative day, we didn't have that quite full-on outside day down, which would have been very, very negative. A couple of other key points just to refresh your memory here. We do have a seeker exhaustion that's active. You can see the magenta risk line has not been broken yet. We did get up in that area today on the open, but price was rejected by sellers. The MACD is a little bit sloppy and fairly low in its overall reading, but it is negative. So right now closed right at the 10 EMA, so just barely keeps the chart either short-term positive, if you like the glass half full, or at least neutral. So we really need one more day here to kind of get outside of today's range to really redefine this trend. Having said that, we do have the potential for a building block for some downside activity, but the bulls really have to show that they're really weakening, and the bears have to come in and really show that they want to assert themselves and take control of the tape. The NQ futures, fairly similar in their overall qualities on the day. We got up close to this 8/8 level on the Gann box, which was pretty much the range high. That was above Friday's high. We did go down and fill Friday's gap essentially. Might have missed it by a tick, but close enough for trading purposes here. It was not that classic outside down day, because you can see by my cursor here we closed within the previous day's real body. So we have the makings of potential negative change up here, but it's going to need another day. And usually when these things need another day, it tends to be non-linear in the way it releases its energy. So the trend is still lateral here, hovering below the 8/8 level, and for now above the 7/8 level. 10-day EMA is essentially flat here, and that's pretty much where we closed on Friday. So we're going to need at least one more day here to sort this out. Now, as far as the market internals go, they were negative, but they weren't decisively so. Our 10-day moving average of the trend got up to 1.18. It's definitely on the rise, definitely starting to release some of this overbought energy that was built into the market that we saw when we recorded this 0.85 reading. But the oversold threshold of 1.35 is still a ways away. So we still got a ways to go to the downside before we're going to record an oversold reading. Here's a look at the cumulative advanced decline lines in the daily time frame. You can see NASDAQ is still struggling here below the prior high. It didn't really take a big hit today. It was only minus about 100 issues. The New York side was a little bit more negative, and it certainly leveled off and stopped its ascent here. So right now it's really just in a sideways range. If we start to break lower and start to print new lows below this prior low, that's going to be a cause for concern for the bulls. But as of now, we're just kind of in this sideways action that definitely could could develop into something interesting on the downside, but has yet to do so. And here's a look at the NDX versus the S&P. It was fairly flat today, didn't really move the needle either way. So we don't have a new low on this chart indicating further weakness is coming, nor did we make any advance to indicate that a real reversal is coming to the upside here. So right now the NDX doesn't have any relative strength versus the S&P, and we're really just trading sideways for now. Stocks versus the TLT is still just kind of basing below this key level here, unable to reclaim that key breakdown that we saw. We are going sideways here. It hasn't really retreated yet. It didn't really lose any meaningful ground today, which is kind of a small plus for the bulls, since they didn't really give back too much. So they could be staging for a break above this, but this still needs to be resolved and has yet to do so. So definitely keep an eye on this, but really nothing from today's price action that we can really hang our hat on. Now, as far as our favorite risk on risk off metric, the S&P divided by the TLT didn't really do too much today. The TLTs were pretty flat. As we talked about earlier, there wasn't really an urgency to take risk off in the market. It was really just kind of a lack of bids for equities. So what we saw today was we saw, you know, not too much in the way of bidding in the TLT space. So there wasn't really a big lift and a big rotation out of money from equities into the safe havens. It was really just kind of a sloppy day where you just kind of saw bids dropping in the overall equity markets rather than a rejiggering of portfolios and a rush to put on more safety trades. So keep an eye on this. We still have a ways to go here before we hit the lower boundary of our trend channel, which would indicate that at least as gauged by these near-term hits, that the risk off has kind of run its course. There's still plenty of room here for a little bit more downside in the S&P and some more upside in the bonds before we get to that level. Here's the multi-sector daily chart, and it really just kind of points to what we've been talking about, just kind of a lack of bids today in general. We saw all the majors kind of just give back a little bit. We saw the SOX lower, the BTK was sloppy, and the BKX also giving back a bit. But we didn't see a bump up here in the XAU. Didn't really see people running to swap money out of the growth-oriented sectors into the defensive ones. So have to just stand by here and see if we can get a little bit more of a turn tomorrow, or see if we're going to go back to our old trend, which had been risk on versus risk off. All right, now here's a look at our sectors sorted from best performer on the day to worst on a percentage basis. As you would expect, the defensive names were kind of populating the top of the list, and the more growth-oriented ones were a little bit weaker. The utilities here was one of the better ones on the day. The OSX was higher, however, which kind of indicates that it was kind of a struggle internally today. That's why we didn't have those real negative internals overall today. So don't have any real fresh counts to be aware of that we can see from our bar counts. We are deep into the counts for some exhaustions, but we really didn't make any progress today since we were so sloppy. So let's take a look at some of the key sectors now. Right, here's a look at the OSX, which was the best sector on the day. Really didn't do too much. It was green on the day. Really one of the only sectors that was marginally green. We are below the 10 EMA and the 50, so this does remain short-term negative. If we do lose this critical area of support here that we've been following the last couple of days, this is going to turn into a really nice short trade that could test this static trend line and then perhaps the 200. But for now, just kind of in a holding pattern. The semiconductors, the SOX, was also kind of lackadaisical today. We're still short-term negative without having a close recently above the 10 EMA, and we do have this 8-ace level of resistance at 437.50 overhead, as well as this risk level from the seeker exhaustion signal. So key support here at 7-ace, which is also coincident with the rising 50, but for now we do remain short-term negative. The BKX was just kind of middling on the day. I think it's going to take a little while to resolve this 8-ace level, since it's one of our big three Murray Math levels. 56.25 is really, really important. They did manage to close it above that level, even though we were fairly negative today in the market overall. And if we do lose that, it's definitely going to put this 50 DMA in play. But for now, still just this little sloppy retracement that we're seeing here, with 56.25 being the key pivot. Here's the BTK, which is just still kind of sloppy, going lateral here in this recent trading range, kind of sandwiched between the +1 ace and the 8 ace level. If we get back down to this 8 ace level and lose that, there's definitely some good room here to the downside before we get to the prior highs and the breakout that we saw over the February highs. Keep in mind here that the MACD is negative and could affect price if they don't kind of recoup this thing and take out these recent highs in the BTK. XAU kind of just hovering here, short, barely short-term positive. It's still above the 10 EMA. Hasn't really seen any kind of burst of buying. The MACD is positive and has some good room before it gets to that zero line. So we definitely could see just an oversold lift in here if the market continues its same posture from yesterday, which would be just kind of dropping bids and then and letting stocks come in. But for now, short-term positive with no real upside momentum yet. Now, oil was strong today, which was one of those things that kind of goes into that intermarket mix that made today not that negative. All things considered, we did expand the range above the previous day's high when we did close above the 50 DMA, which gets this back to a more positive posture. The MACD is curling up from being negative back up to the zero line. If we close above the zero line, that's oftentimes where you can see some positive momentum really start to kick in. So definitely keep an eye on near-term levels here. Break above today's high would definitely be notable because that would be a follow-through indication and qualify that break above the 50 period moving average. Now taking a look at the gold futures. Really just not doing too much here. We did have a break to the downside that was recouped as the equity started to sell off. Still short-term positive with just a little bit of momentum to the upside here, but we never really did get that MACD cross above the zero line to really get any positive momentum going. You can see how important that was here back at these areas where it was curling back up from being oversold, but never took out that zero line to get any positive momentum going to the upside. All right, folks. So on balance today, we had just kind of a sloppy day with a lack of bids. The internals were not good, but they were definitely to the downside. But they were definitely not those kind of catastrophic and decisively negative market internals that really implies that there's really a whole lot of downside coming. Doesn't mean we can't get more downside, and it doesn't mean it's not coming. It just means that the market right now today wasn't signaling that it's coming today, tomorrow, and you have to be looking for it. So for tomorrow, I think we need to be looking for two-way trade and definitely pay attention to the first 30 minutes and see how the opening range sets up. Okay, as always, this has been Rich Derrick for Tradesight, and thanks for listening.